So moving along to another asset class, we're going to talk about what historically was considered a girl's best friend. But Cormac, if you could introduce yourself and what you do with Diamond Standard.
Yeah, thank you. So I'm Cormac Kinney. I'm the founder of Diamond Standard. My background briefly is computer science, and I've been a founder of 5 fintech companies, and 4 of them have been acquired by public companies over the last 30 years or so. I also spent a few years as a quantitative trader running large funds for Tudor and Millennium, where I learned a lot about automated market making, StatArb, and things like that. But a funny thing happened about during my path. My wife of 21 years now is a famous jewelry designer, and I accidentally learned way too much about diamonds and decided, oh, I can use my quantitative technologies on that. And the result of that has been about 6 years of research and a lot of patents later, we've developed the world's first regulator-approved diamond commodity, which looks like this. These are Diamond Standard coins. These are real diamonds in here. But what's interesting is that these 2 coins, even if they're made 30 years apart, we can prove that they contain the equivalent geological content, which means all these coins have the exact same value on any given day. So for the first time, we've made diamonds very much like gold, where there can be a spot price, price discovery, liquidity, low transaction costs, and you can use diamonds as an investment on top of which you can have futures, options, ETFs, etc. So what we're triggering now, we've just had our regulator-approved IPO about 3 months ago, is we are positioning diamonds as an asset for the first time in institutional and individual portfolios. And all the benefits of a hard asset, especially now when there's unlimited money printing around the world, hard assets time and time again have proven to protect wealth, hedge against inflation, and provide an asset that's not somebody else's liability in times when the musical chairs might stop one of these days. And we're very excited now to share this commodity with the world for the first time.
So cool, that's fascinating. So a lot of questions. So is it, you said, the regulator approved IPO, so it's traded on the US stock exchanges, or how does it trade?
It's very rare that a new commodity is created.
Right.
So the challenge we had is like gold. The gold miners don't decide the price of gold. And we couldn't do that either. We can't price fix. So we had an IPO where we sold $25 million of the commodity. Using those proceeds, we bought the first groups of diamonds. The way we create this commodity is by buying statistically valid samples of millions of different types of diamonds. And the IPO proceeds were used to establish that process. And
so
now,
is it more like an ICO, an initial coin offering, or is this, because I think of so
technically it is an initial coin, but the commodity is real. Obviously.
Right, but it's, okay, but I'm just trying to understand the regulatory environment, because Bitcoin is, operates outside of, the regulatory system we're used to in the stocks and bonds. So, so where does your coin stand?
Yeah, we decided early on that we wanted to be regulated because there's a lot of distrust and misinformation. So our tokens actually, that each coin, by the way, is a computer chip, has a computer chip. That computer chip stores a token, and that token, while these coins are sitting in Ranks or JP Morgan, an owner can trade the token, and that trades the ownership. That token is a regulator licensed token, licensed by the Bermuda Monetary Authority, just because they happen to regulate these things, but the SEC doesn't. However, we also have regulatory approval to list a futures contract on the CME Globex, which will be coming out in, I think, 4 or 5 months.
Right. And one, I know Robert's got a question, but one quick question before that. is there a meaningful difference for what you do between natural diamonds and synthetic diamonds?
Well, we only use natural diamonds. So, what's interesting about diamonds is they actually haven't found a diamond mine of any substantial size at least for about 25 years. So diamonds are extremely constrained. However, if you take all the diamonds that are above ground and the ones that are in the supply chain, their current value is about 1.2 trillion. 1.2 trillion, by the way, is more than the value of all the silver, platinum, and palladium combined. So diamonds as a natural resource, and they're not a precious metal, but as a portable precious resource, are second only to gold in total market value. And if you look at each one of those precious metals, investors already own at least 15% of the above ground supply. Palladium, for example. You never see palladium, but investors own 15% through bars, coins, ETF shares, etc. But investors own really nearly 0% of diamonds. So what we're expecting is a secular phase of position building over the next maybe 7 to 10 years, where investors ultimately acquire, we believe, 15% of all the supply of diamonds.
Just a quick question. First of all, I think it's amazing, the innovation to come up with this.
Thank you.
That's awesome. I'm trying to figure out how investors might make money in this. Is the idea that there will be further appreciation of this? I mean, I'm of the perhaps mistaken impression that De Beers controls the world diamond prices. I don't know if that's true or not, but
Not true.
okay.
Used to be true.
Help me understand. Is this part of that disintermediation or whatever? Give us some more color on that, please.
Very much so. So De Beers only controls about 22% of the new diamond production. New diamond production is only about 40 billion a year. So the above ground supply is 1.2 trillion. 1.2 trillion versus 40 billion. So the stock to flow is an extremely small percentage, 1.some%. De Beers controls 1/4 of that. Our supply is actually consumers we need to buy our diamonds from consumers, and we formed the world's first and only electronic diamond exchange to do that. We're also the world's first and only market maker. We bid transparently on 16 million varieties of diamonds. The investment thesis, to answer your question, is really comes down to supply and demand, which is the underlying bottom level. There's a very limited supply of new diamonds. De Beers has no stockpile. They're public, so we know they have about 90 days supply on average. There's no secret caves full of diamonds. We have already mapped out the physical commodity, which is being traded on spot exchanges. We already have approval for futures and options. We've already filed in partnership with the NYSE. We filed an ETF. That'll be like GLD, make it much easier to acquire this asset. That demand is completely de novo. There was never an investor demand for diamonds. That demand is against a very fixed supply. And therefore, economics 101, demand is going up, supply is staying fixed. The price has to move up the curve. Right now, even though one of our earliest, largest investors is one of the largest asset managers in the world, they can't buy this asset because there's not enough depth of supply in the market. So our initial clients are high net worth individuals, family offices, and hedge funds. And then once we have a national market price with the futures, then we'll unlock that asset for institutional investors.
So is the idea that families that maybe have some out-of-fashion jewelry, or in other words, how do you hope to scoop up some of this, I don't want to call it the float, but you know what I mean, the part that's not owned by De Beers out there. How are you going to capture that?
Right now, our diamond exchange has about 1 billion of diamonds listed on it, which are all from the world's largest diamond vendors. So for the time being, we're buying from the vendors. We're buying from all the world vendors. However, this is part of our ESG story. We've formed a company called Diamond Standard Recycling, which is going to be, I believe, the world's largest buyer of secondhand diamonds for consumers, and we're launching that globally. Right now, we buy diamonds in 8 countries around the world. We'll be launching Diamond Standard Recycling also in all those venues.
Interesting. So, just in the interest of time, I'm sorry, but we're going to have to shift over to Tony, but we'll circle back. So, one thing I forgot to mention is I would love to have lots of questions from the audience. And so, since we're moving sort of topic to topic, you know, if you have questions along the way, if you want to backtrack a little bit, feel free to interrupt. I didn't really mean that, George. I was saying that just to be nice.
Plus we're up against
Throw
a
it out
break.
there.
And we are up against the break.
They've
If you guys
agreed
wanna
to
hang
stick
out.
around to answer your
But if you guys do want to hang
questions.
around for.
They're not thirsty or
30
anything.
minutes. Well, it's not that break. But George, something quick?
I was going to ask Kenny, what part of that float, so-called float, constitutes conflict zones?
Yeah, blood diamonds.
Yeah, the question is, the float includes conflict diamonds. So that's one big benefit of our company is we're cleaning up the entire diamond supply. We're regulated. So we require all of our suppliers and vendors to adhere to the Kimberley process, which is the United States nation's policy to eliminate blood diamonds.
Interesting. Great.
blood diamonds.
Yeah. Okay, great. So we are going to move on to Tony. Sorry, Tony.